Our countdown closer has some picks for that. Joining us now, Mainstay Capital Management CEO and strategist David Kudla. David, interesting day today. Oil up and stocks are up. We don't often see that. Plus, we've got the Fed meeting announcement tomorrow. The meeting already began today. So what do you like here?
Well, in this environment, obviously everyone is concerned about the war in Iran and what that means for the price of oil, near $100 a barrel, and the prospects for what that could do for stagflation. It's a drag on the economy because it's a tax, but it also causes inflation. So it's more ingredients for that stagflationary environment we're all concerned about. In that environment, where can we invest and make money? One we like is Harbor All-Weather Commodity ETF, HGER. It's up over 20% in 2026 versus the S&P 500 down about 2%. You know, we like commodities. We've talked about gold. This holds gold, holds energy, holds some agricultural products. Also, the defense industry, it's had a good run, and we've been there to enjoy it in two ETFs, PPA and WAR, W-A-R, but we know that with all these weapon systems that are being used and stockpiles that are drawing down, for months we will see those being restocked, and that will drive profits. Lockheed, for instance, the #1 holding in the PPA ETF, has promised the U.S. government they would quadruple the production of their critical weapon systems. That's just going to be top line and bottom line growth for months to come.
And in the midst of this war, I think you're right, there is an immense focus on it. But just a few days ago, I was reading commentary from some top investors out there, some gurus, and they were saying that investors' risk tolerance is falling. I'm not sure about that. I think investors have gotten savvy enough to understand that perhaps, and we can only hope, but perhaps this will be a limited situation in Iran, just like the president said, a couple more weeks, let's hope. And then I think that they've also become savvy enough to understand that, for example, oil, we are energy independent in this country. You could argue we have a glut. So therefore, there aren't that many people who are so scared, but I do find your Harbor ETF very interesting. It gives people a lot of exposure to things that do well no matter what.
Yeah, we get a broadly diversified commodity exposure. Gold did very well in the fund, energy more recently, soybeans, grains. We just like with stocks down this year, still down 2% with the recent rally. Bonds are about flat on the year, and commodities are doing very well. It's an underallocated position in most portfolios, institutional and private portfoliows. We're significantly overweight commodities. We've been talking about gold on the show, for instance, for a year. And so, when we look at the U.S., if you consider all of North America, we could be considered energy independent. But yes, the U.S. is now the largest oil producer in the world. And a lot of the oil coming through the Straits of Hormuz, it's going to Japan, it's going to China, it's going to other places. And there's been some workarounds already with the Petroline in Saudi Arabia, where they're going to transport enough oil to the west part of the country that they'll have 6 to 8 million barrels per day coming out of the Red Sea. It's not the 20 million through the Strait of Hormuz. But it's very likely that we see this. We've seen oil come down a little bit. When it comes down more, we will see the stock market rally.
Well, let's finish this show really quickly because we're losing steam faster than I thought. Still in the green, but the Dow now up just 54 points. David, nice to see you. Thank you very much for joining us.
Thank you, Liz.